Hello everyone, welcome to the series where we're going to be revising and practicing the questions of ITC, right? Starting with the first question, it says that Mr. Ajay is a registered supplier of goods who pays GST under the regular scheme, and he has provided us the following details. What is the details that he has provided us? He has provided that the interstate taxable supply of goods is rupees 10 lakh, which means taxable supply of goods means this is his sale, and it is interstate, which means IGST will be applicable. Intrastate taxable supply of goods is rupees 2 lakhs. Again, this is sale because it is given intrastate taxable supply, so it is sale, and since it is intra, it will be CGST and SGST, right? And the third point given is intrastate purchases. Since it is purchases, you can take ITC on the same. The value is rupees 5 lakhs and it is taxable. Okay, great. Other than this, they have given you the details of the opening ITC, 20,000, 30,000 and 25,000 respectively. The rate of tax used in the question is 9%. You have been asked to calculate the net tax, net GST payable. Very easy question. Let's quickly have a look at it. First, we make our working note 1, which is the outward tax liability. In outward tax liability, if you look at the first item, it is interstate taxable supply of rupees 10 lakhs. So let me write it. Interstate taxable supply. The value is 10 lakh rupees. Since it is interstate, what will be applicable? IGST will be applicable. So it is 10 lakh and the rate is 18%. So it's 1,80,000, right? So this adjustment is done. Next is intrastate taxable supply of goods worth rupees 2 lakhs. So intrastate taxable supply. Intrastate taxable supply. What is the value? The value is rupees 2 lakh. The value is rupees 2 lakh. And because it is intrastate, it is C and SGST. So 2 lakh into 9% respectively, 18,000, 18,000 nil. Absolutely clear. So second adjustment also done. Now third, it is intrastate purchases. That means I can only claim ITC. Correct? It's my purchase. It is not my sale. Value is rupees 5 lakh. So let me go down here. First, before that, I have to write the opening balance. Intrastate purchase. How much is the value? 5 lakh rupees. And since it is intrastate, what will be applicable? C and SGST. So 5 lakh into 9%. 45,000, 45,000. 45,000, 45,000 nil. Opening balance. I'm sorry. Opening balance is given in the question. What is the opening balance, guys? 20, 30, 25. Opening balance is 20,000, 30,000, 25,000 respectively. 20,000, 30,000, 25,000 respectively. What is the total? 25,000, 75,000 and 65,000. So this is the total of ITC, correct? And what are you getting as your total of 18,000, 18,000, 1,80,000. Now let's calculate the net GST payable. Working note number 1, 18,000, 18,000, 1,80,000. ITC, how much did I get? 65, 75, 25. 65,000, 75,000, 25,000. Okay. So first, what will I do? I will utilize the entire. First, I always told you in class, start with IGST. Have I utilized the entire IGST? Yes. 1,80,000 minus 25,000. How much I have excess? 1,55,000. Let me see if I am getting anything in S and CGST so that I can use it. If you see SGST, 18,000 is only outward tax liability. How much ITC you have? 75. So 18,000, I will completely exhaust it. So 75,000 minus 18,000, you are getting 57,000. So I have utilized the entire 18,000. So my payable is nil. Okay, and I have excess how much? 57. Can I use that 57 here? The answer is yes, I can use the 57. So I have utilized the entire excess, so nothing is left to carry forward in SGST. Even after using that, how much am I getting? 1,55,000 minus 57,000, which is 98,000. Okay, let's see if we have some excess here. Yes, CGST 18,000 is only the outward tax liability. How much ITC have? 65. So 65 minus 18,000, 47 excess I have. So you can subtract the entire 18,000. CGST is nil. The 47 I will utilize here. How much am I getting? 98,000 minus 47,000. 51,000 is to be paid in cash. IGST 51,000 is to be paid in cash. So this is your entire question number 1. Very simple, no complicated adjustments. You just have to place it. Okay, so just remember here the only thing that you have to see in this question is the order of set off. And I've told you how to do the order of set off. First you do the IGST, then go for SGST. FGST you have completely exhausted. You have some excess SGST, you can use that for IGST. Then CGST, use that to exhaust CGST first. If you have anything excess, then come to IGST. Right? So this is the order of set off. That's the only thing you have to be careful about in this question. Otherwise, it's a very plain vanilla question. I hope it was clear. Now let's move on to the next question. I'll just scroll through the entire solution also. In case you want to take a screenshot or make a note of it, you can do the same. Yeah? So we started with working note number 1, which was outward tax liability. Then working note number 2, which was input tax credit. And last is your net tax liability to be paid. Right? So let's move on to the next question. So let's move on to the next question. Question number 2 says that Rohan Enterprises is a registered supplier of goods in Assam. It purchases goods valued at rupees 10,000 from Mehta supplier. So Rohan Enterprises is my client. He is purchasing. That means he is purchasing. It is an inward supply, right? So what will I get if I paid GST on the inward supply? I can claim ITC, right? So how much has he paid? He had paid 10,000 for those inward goods, for that raw material, and it was purchased within the same state. That means it is an intra-state supply of 10,000 and the rate is given to us in the question as 9%, right? So if I move on to the working note number 2, which talks about ITC, my value is 10,000 and 10,000 into the rate of tax is 9%, which amounts to 900 each CGST and SGST, since it is an intra-state supply of intrastate purchase of raw material. Next is Mehta suppliers charge CGST and SGST separately in its invoice, which is great, right? Subsequently, Rohan Enterprises sold these goods valuing 9,500 to Verma manufacturers located in Assam. Okay, so these guys have sold. Rohan has sold it to Verma, right? 9,500 and the rate of tax is again 9% CGST and SGST, because it's given that it is sold within the same state, right? The next line is 20% of inputs purchased are still lying in the stock and there is no opening stock of goods. Okay, there's no opening stock and 20% is still lying in my stock. You tell me, will my ability to take ITC be affected in any ways because I have some stock left at the year end? The answer is no. There's nothing like that. We have studied, right? So 20% stock is lying in your godown is just a line given to confuse you, but you are not supposed to get confused, because let it lie. I have purchased, right? I have paid GST on that. I will take ITC, right? So this is the only tricky line of this particular question. However, it has no adjustment to be made because you purchase goods, raw materials, and it is lying in your stock. What difference does it make? It does not make any difference, right? So here, if I move on, that's it. The question is done. We can find out. Finally, it is 8:55. Sorry. It's 8:55, 8:55 and nil. And this amounts to 900, 900 and nil. If I go to my final column, my outward tax liability is 855, 855 of SGST and nil of IGST, 900 CGST, 900 SGST and nil of IGST, right? If I look at my final net tax liability that is there, have a look at the question. I have outward tax liability of 855 and my ITC I have 900. I have excess of ITC. Can I use my entire ITC to pay my outward tax liability? The answer is yes. So there is nil that you have to pay in cash. Similarly here there's nil that you have to pay in cash. Why? Because your outward tax liability is less than your ITC. Your ITC is more. So you will utilize the entire ITC in paying your outward tax liability. And what is the GST? Or what is the ITC that you will carry forward? It will be excess of 855, right? So 900 minus 855, 45 will be the ITC that will be carried forward to the subsequent years, and in the subsequent years for payment of my tax I can utilize the same. So this was the second question that we have solved. The only important part in this question was that line which said 20% of inputs purchased are still lying in stock. There is no difference that it is going to make. I have purchased paid GST on that my purchases, so I will be allowed to take ITC, right? So that ends the discussion of the second question. Let's move on to the third question. I'll quickly scroll through in case anybody wants to make a quick note of the same. Right? So working note number 1, which is outward tax liability, working note number 2, which is your input tax credit, and the final net tax payable table. Right? So that ends our discussion of question number 2 as well. Hello everyone, so let's move on to the third question, which is Paritosh and Company, a supplier of goods, pays GST under the regular tax scheme. Okay. Next, it has made the following outward supply in the tax period. So they itself told you that the first two columns relate to the outward tax supply, in which intrastate is 10 lakhs and interstate is 8 lakhs. So for intrastate it will be C and SGST, for interstate it will be IGST. Next, after that, it has also furnished the following information in respect to purchases made in that period. Purchases means it is my raw material that I have purchased. It is my input, right? So I will be paying tax on that and I can avail the ITC. In that, intra is 3 lakhs and inter is 2,50,000. So this is the value. So you need to multiply the respective GST rates and calculate your outward tax liability and ITC respectively. Moving on to the next part of the question, they have told this is your opening balance of ITC that was there. Okay, great. And then they have told you that the tax rate is 9%, 9% and 18% respectively. All the conditions that are required for availing ITC has been fulfilled, and you are required to compute the net tax that has to be paid. Okay, so pretty simple questions. Let's move on. Okay, first let's do the working note number 1, which is my outward tax liability. So intra is 10 lakhs and inter is 8 lakhs, right? So let's go on. It is it is intrastate supply is 10 lakhs and interstate supply is 8 lakhs. For intra it is C and SGST, so 10 lakhs into 9% respectively, 90,000, 90,000 and nil, and 8 lakhs into 18% will be 1,44,000 of IGST. Right? So this part has been completed, these two done. Next, moving on to my ITC, that is my working note number 2, which says that intra is 3 lakhs and inter is 2,50,000. So if I move on to the working note number 2, intra-state purchase, interstate purchase. But before that, I have also an opening ITC, so let me just make some space for that. Yeah. So here I have opening ITC also. How much is the opening ITC? 57,000, 60,000 and 1,47,000. 57,000, 60,000 and 1,40,000. Perfect. Now let's move on. This column is done. 57, 60, 1,40,000 I have written. Here, last is left. So 3 lakhs is intra and 2,50,000 is inter. 3 lakh is intra and 2,50,000 is inter. Now, 3 lakhs is intra, so there will be CGST and SGST. So 3 lakhs into 9%, it is 27,000, 27,000 and nil. And 2,50,000 into 18%, it is 45,000. Is that perfect, guys? Now, if we do the total, it comes to first column is 57,000 plus 27,000. It is 84,000 in total. Here it is 60,000 plus 27,000, which is 87,000 in total. 1,40,000 plus 45,000 brings it to 1,85,000. Is it absolutely correct, guys? And is there any totaling required here? No, they are, yeah, nothing required. So it's 90, 90, 1,44,000. Let's move on to our last, calculating the outward net tax liability. It's 90, 90, 1,44,000 if I'm not wrong. Is that correct? Yes, it's 90, 90 and 1,44,000. Yeah. And it's 84,000, 87,000 and 1,85,000. I always told you order of set off start with IGST. IGST, my outward tax liability is 1,44,000. ITC, how much I have? 1,85,000. So I have excess ITC, no problem. So 1,85,000, I will use my entire 1,85,000 to set off my outward tax liability. So nothing to pay in cash, and I have excess of 41,000. This is my excess. I will see if I can utilize it somewhere else. SGST, 90,000 outward tax liability, I have 87. So I have used the entire 87. After that also I will have 3,000 to be more to be paid in cash, but I will not do that because I have excess ITC. In IGST I can utilize that, right? So I will use the 3,000, and this 3,000 is IGST credit. Okay, so I've utilized that completely. So here now it is nil. Next is 6,000. I have 90,000 already. 84,000 I can use the CGST ITC itself. So I have 6,000 that I'll have to pay in cash. But no worries. I have 41 I had in IGST, in which I used out of 41,000 I've already used 3,000. So I have 38. I can use 6,000 more. So here also it will be nil. So out of the 41 that we had, ITC carried forward, we had 41,000, in which we utilized 3,000 and 6,000. So how much can I carry forward? 41,000 minus 9,000, I can carry forward 32,000. Is that perfect? So that is your entire question. I'll quickly scroll through the entire question in case you just want to make a note of it. So this is your working note number 1, which is your outward tax liability. Working note number 2, which is your ITC. And your working note number, your last net tax liability, okay, after setting off the credit, right? And your last, how much do you carry forward? You will carry forward 32,000 of IGST. Right? So that ends our entire discussion on this question as well. I hope you understood. Let's move on to the next question. Hello everybody, let's move on to the next question, which is K&K Limited, a registered supplier of Mumbai, is a manufacturer of heavy machines. Its outward supply for the month of January is as follows. Your interstate supply is 85 lakhs. So 85 lakhs is interstate. That means you can take IGST on 85 lakhs and intrastate is 15 lakhs. So on 15 lakhs it will be CGST and SGST respectively. Moving on, they have given you the rates of tax, which is 9% and 18% respectively for CGST, SGST and IGST. And the detail of your inward supply has also been given. Your raw material you have purchased, which is raw material A, of which 70% that you purchased, you have already utilized it, and 30% is still lying in your stock at the end of the month, right? Now, does that make any difference for taking ITC? The answer is no. I have purchased it, I have paid ITC on, I have paid GST on that. If that is reflecting on my GSTR 2A, then I can comfortably take my ITC. There will be no problem. Whether I utilized or not, whether it's lying at the end of the year, that is not a concern at all, right? Moving on to the next point. Which is raw material B, of which 90% material were received in the factory and remaining material was completely damaged due to a road accident. So for 90% of 50,000, that is for 45,000, I will be able to take the credit, but for 5,000, I cannot take the credit. Why you cannot take the credit? Because the goods were damaged. Only if you utilize the good, you are going to do any further supply, then only the department says we will give you ITC. Here your goods are damaged. In case your goods are lost, your goods are damaged, then or you've distributed them as free samples, you will not be allowed to take ITC, right? So for 5,000, you will not be able to take ITC. For 45,000, that is 90% of 50,000, which is 45,000, ITC will be allowed. Next, moving on to the next one, which is construction of a pipeline laid outside the factory. We studied this adjustment very clearly in block credit concepts. If your pipeline is laid outside the factory. For that, whatever GST you paid, you will not get any credit. So for 30,000, there will be no credit that you will be receiving. And insurance charges paid for trucks used for transportation of goods. In this, will you get ITC? The answer is absolutely yes, because only for car up to 13-seater the ITC was blocked. If it was blocked for car, then repair related to that car and insurance related to that car also ITC was blocked. Here it is truck on which ITC is allowed. So insurance on truck also ITC will be allowed, and repairs on trucks also ITC will be allowed. Since this is insurance, the ITC will be allowed. And then they have given us that there is no opening balance of ITC, which is great. Okay. Next is details of GST paid on inward supply are available in GSTR 2A. So details of GST paid on inward supply. So whatever on my purchases, on my inward supply I paid GST, that is reflecting on my GSTR 2A. Okay, it should reflect. Then only I will be able to take the ITC. Except for item number 1. This item number 1 that you purchased or raw material A, that is not reflecting in my GSTR 2A. Why is it not reflecting? Because my supplier has not filed GSTR 1. Because only when my supplier files GSTR 1, it will reflect in my GSTR 2A. We studied very clearly this concept in the return chapter. Also, I told you about this mechanism in the ITC chapter. So here, since my supplier guy has not filed GSTR 1, it is not reflecting on my GSTR 2A. If it is not reflecting in my GSTR 2A, I will not be able to take the credit. So for the 60,000, you will not be able to take the credit because your supplier has not filed GSTR 1. Therefore, it is not reflecting in your 2A. And if it does not reflect in your 2A, you will not be able to take the credit. Okay, so this information we know what to do. Next is amount. We need to compute the amount which is eligible for ITC and the minimum net tax GST payable in cash. So without any delay, let's get started with the question, right? So interstate supply is 85 lakhs. So interstate is 85 lakhs. Interstate supply value 85 lakhs. So it is 85 lakhs into, since it is interstate, into 18%, 1,53,000. Right? And our intrastate supply was how much, guys? Let's look at it. Intrastate supply was 15 lakhs. So 15 lakhs. Do along with me, okay? Do your calculations along with me. 15 lakhs into 9% each, 1,35,000, 1,35,000 and nil. Okay, so this is done. So my total is 1,35,000. 1,35,000 and 1,53,000. Perfect. Now let's move on to the input. Okay, raw material I have purchased, but for that did not reflect in my raw material A. My supplier has not filed his GSTR 1, so therefore it is not reflecting in my GSTR 2A, so I will not be able to take any credit. So for raw material A, the value is how much, guys? The value of the raw material is, okay, value is not given, it's directly given 60,000, but you will not be able to take any credit on this, right? Value is not given. Okay, reason I'm not writing, guys, but in the exam you have to write the reason. Why you are putting it as nil, you have to justify, okay? Next is raw material B. 90% of the material was received fit and fine, but 5% was damaged. So for 5% you will not be able to take the ITC, right? So this is raw material B. I will be able to take the ITC for 45,000. 45,000. 5,000 I cannot take because 5,000 worth was damaged. So this is done. Construction of pipeline outside the factory. Pipeline again. Nil, nil, nil. Blocked credit, no ITC. Insurance on trucks, on that you can take. Insurance on truck, can I take? Yes, which is 55,000. 55,000, nil. We remove these two. So this sums up to a total of 1 lakh, 1 lakh, nil. Right, moving on to my final. Outward tax liability is 135, 135, 153. 135, 135, 153. And my ITC is 1 lakh, 1 lakh and nil. 1 lakh, 1 lakh and nil. I don't have any opening ITC also. So payable in cash is 35,000, 35,000, 1 lakh 53,000, right? Net tax payable in cash. So that ends our this question. Very, very simple question. It looked a little tricky, but it's not. See, these are the total income questions, total computation questions that they ask you in GST. Pretty simple if you know the concepts, right? So I'll quickly scroll through the solution so that in case you want to make a note, you can do that. This is your working note number 1, which is your outward tax liability. Working note number 2, which is your input tax credit. And your final, which is your net tax liability to be paid. Right? So that ends your discussion of this question as well. Move on to the next question. I hope it was absolutely clear. Right? Moving on to the next one.